and welcome to today's VC Lead Ladies session on being an effective board member. We had close to 200 signups and just as many questions submitted, so I've tried to encapsulate them all, but please post your questions in the Q&A tab in case we don't cover them. Now to introduce myself, my name is Yasmina Darbaniza, and I'm an investor at Round Hill Ventures, a PropTech VC firm investing in early stage startups, reshaping the built environment through technology. I started the VC Lead Ladies educational series last year to encourage female investors to exchange insights, develop meaningful connections, and lean in and help each other move up in a male-dominated industry. While female representation on boards is improving, according to a study released by Deloitte last year, UK boards still only have a quarter of female representation, and women only hold around 17% of board seats globally, despite efforts to improve inclusion and gender balance, and a growing body of evidence showing that diversity at the top can bring competitive advantages to corporations and investors. Now, without further ado, I would like to introduce Fiona Hathorn, CEO of Women on Boards, an independent and action-oriented organization with a proud history of supporting women to leverage their professional skills and experience into non-executive director and other board-level roles. Fiona is an expert in the areas of governance, regulation, and talent management, who has sat on both marketing, audit, and finance committees, and is a judge for the Non-Executive Director Awards, sponsored by the Sunday Times, and is on King's College London's Global Institute for Women's Leadership Advisory Board. That's a mouthful. So now Fiona is going to take us through a basic training session on what it means to be a non-executive director and how to be an effective board member. Fiona, take it away.
Well, Yasmin, thank you so much. If you could meet yourself now, Yasmin. Now, we've got a lot to get through because being an effective board director is complex and it looks easy, but it isn't always easy. So I've got a PowerPoint which I'm going to share with you, and I'm going to bounce through those slides really, really quickly and then hopefully move over into discussion. So I'm just about to share the PowerPoint with you now. So this is me. I'm Fiona Hathorn, and I run two networks really, Women on Boards UK, which advertises board roles for free and supports anybody transparently, open to all, to get board roles if they're interested. And I also have another brand called Next Gen Directors, which is a brand that we use for corporates because, funnily enough, the word women often puts men off, and I don't want to do that, and we do a lot of work supporting men joining boards as well. Why wouldn't we? Just so you are aware, we have a workshop called Getting Started Realising Your Board Potential, because don't even try and think about joining a board if you really don't understand your duties, responsibilities and liabilities, because the buck stops in the boardroom. And really understanding the dynamics of what does a director really do, which I'm going to cover in this webinar, is really, really important, as well as fully understanding the landscape of opportunities. Interestingly enough, I'm an angel investor myself, and I didn't really understand the glass ceiling or the boardroom, even though I was an asset manager, until I became an angel investor, and particularly understanding the issues that women have getting VC or private equity support, because it's a very male-dominated industry. So if you want to join a board, you also need to have a really good board CV, and you can't write a good board CV about your board value add, not your executive value add, until you really understand the dynamics of the boardroom. So if you want to know more about that, that's a three-hour workshop plus a mentoring session. Let us know later. So today, Yasmin asked me to talk about being an effective non-executive director, and I call this little talk today an amuse-bouche. It's a starter, it's a taster for you to really think about how you might be an effective NED. Now, one of the things, if you want to be an effective NED, you really need to understand the role of the board. What are you there to do? There are shareholders, you're there to represent the shareholders, you're there to represent the members. Members might be in the case of a sporting body. You've got employees, you have duties towards your employees, and COVID-19 has certainly made us very aware of that. And then there's the public. the community at large. It might be a government board, but even if you're on a listed board, you really do need to think about the public and the environment. And so there's lots of things to consider. And let's not forget that most boards do have a regulator, whether it's the government in terms of the Companies Act, or whether it's a charity in terms of the Charities Commission, but there are lots of regulators out there. But if you join a board, understand the buck stops with you. It's an important role. I think you're never too young to be on a board. And actually, I've got a short video that I'm going to share with you today from Alison Rose, the chief exec of RBS and now NatWest. She was 15 when she first got involved in boards because she was a lifeguard. And if you join a board earlier on in your career, you're floating at the top of an organisation, and it usually makes you a better executive. But if you join a board, let's not make it too complicated. If you go for an interview for a board position and you make it too complicated, we're actually petrified of you joining our board, because what boards do at the end of the day is simple. It's about conformance, abiding by the law, filing your accounts, following GDPR policies, having good HR policies. So there are certain things that you need to do, and a board is overseeing that the executives are doing that. And then there's performance, and performance to me is stargazing. It's the strategy of the business and getting that right. And boards tend to swing between one or the other. And often in the early stage of your companies or the venture capitals, it can be very focused on performance more than conformance, but the two very much sit together. And if you join a board, your job is to scrutinise, challenge and support. And how you do that matters. It's one of the reasons why getting into the boardroom is difficult, because boards know about diversity. They know about diversity enhances performance if you can manage a diverse group of people. But actually, we also know that we're petrified of people we don't know joining our board. So getting your messaging right is really what my organisation is all about. Now, I'm not going to labour on this slide. I don't like wordy slides, but the corporate governance code in the UK is very clear, and it's not dissimilar to all the other good corporate governance codes in Canada, for example. You are there to challenge and help develop the strategy. Scrutinise the management. What are they doing? Putting in performance targets for them, and overseeing the integrity of the financial accounts. And you only need to read the FT and see what happens when things go wrong with accounts. Carillion is a very good example of that. How were they accounting for the orders and their pitching, and how did that affect the balance sheet and the cash flow? Remuneration. How much should people get paid? Your job is to make sure, certainly at the C-suite level, people are paid appropriately, but then not too much. And remuneration committees are very interesting at the moment, given that we've been furloughing staff, we might have taken government loans. So the balance of that mix is also very important. And then you're there to remove the chief executive if necessary, and for sure consider succession planning. So that's what a director does. Sounds easy, doesn't it? Well, it's not. Because what do you really do? You're bringing moral compass, intellectual rigor, leveraging your networks, very important in the sort of venture capital space. Many of the boards don't actually want, or private equity, they don't actually want a non-exec director representing shareholders and stakeholders because they feel they own the business. An interesting balance if you sit on a board that is both listed and also has private equity involvement. But what's really important if you want to join a board is its noses in, looking down on the organisation, and fingers out. Don't dive down drains unless a drain needs diving down. Otherwise, you will drive the management team insane. Boards are made up of people, companies are made up of people, and an effective NED understands that noses in, fingers out, and they understand that we're all human. And everyone in the boardroom comes with a different perspective, and that's what makes it difficult. And it's one of the reasons why selecting a board, because of your financial liabilities and responsibilities as a registered director is important, and why the chair of a board matters. There's lots of books on this. This is one I particularly like, Boards That Lead. Boards, depending on where you are in your cycle of business, it depends on how active a board might be. So there are boards that monitor. There are boards that stay out of the way. I'm thinking Sports Direct is a good example of here, quite difficult to manage, Mike Ashley. Boards that take charge when something's going wrong, when the chief executive needs to leave, or there's a financial crisis. And then boards that partner on a regular basis. So there's lots of different types of boards, and the type of board and how they behave often depends on the type of business and where they are in their cycle. Now, I'm a great fan of Warren Buffett, having been a fund manager, and I love this point. When do you stay silent and when do you take charge? Being consensus is one thing, because boards should make collegiate and consensus decisions, but be careful if the board is constantly too polite, because you need to challenge the chief executive, and getting that balance right is always very, very difficult. And even Warren Buffett himself admits he doesn't always get it right, because it's not about being fair, it's about doing the right thing for the shareholders. And he talks in his annual letters about that. And I love this. Too often, he has said he stays silent to proposals that he thinks are counterintuitive or potentially counterproductive to shareholders, stakeholders. So it's judging when to speak and when not to speak. And most good, effective board directors are good listeners. So the chair is really, really crucial. And I'm going to bounce through what makes a good chair. I like research. And I've been lucky enough to go to INSEAD and meet this particular gentleman who has written a book, it's called Stalistan, on leading a board and what are the principles of an effective board. So I'm going to whiz through these. You should be a guide on the side. So if you want an effective chair, a good chair speaks for less than 10% of the time. So be careful if you join a board with a chair that has strong opinions, because the chair is steering that ship and hopefully listening to you and listening to your views. A lot of people say the board needs to be a team. Well, the board is a team, but you don't meet very often. So if there's a team you don't meet very often, think about what you're there to do. You are there to be collaborative, but you're there to bring, each of you are there to bring your independent voice and your independent expertise. Spending too much time trying to be a team can be difficult in the boardroom. Owning the prep work. A good board has a good agenda. That is actually the chair's job, to decide which are the important discussion points, where can we help management and where can we not. It's a guide. So often, if you're joining a board, having a look at agendas and having a look at minutes gives you an idea, because that's the legal record of what's been going on in the boardroom as to how it works. And it can really, really help. So I would want to be sure that I liked the chair before I joined a board. I also liked the chief executive, and I felt that the two of them had a good relationship. If you join a board, most of the detailed work is done in committees. So if you want to join a board, be aware of what committee you think your voice would be most heard. Is it audit and finance? Is it REMCO? Is it going to be the ESG, the Environmental, Social and Governance Committee? There's lots of different boards that you can contribute to, and I would want to know where my voice was best used and which committee. And it's also very important to remain impartial. Avoid the temptation to jump in and play, that nose is in, fingers out. And the dynamics of the interview process to get onto a board, it's often about your personality and about your fit. It's one of the things that we do a lot of to support people behind the scenes, how they come across. Because by the time you get to an interview, you're usually all good enough for the board. The question is, how do you behave? Might you be a person that's going to annoy and fiddle? Or are you really going to concentrate on the visionary aspect of stargazing and governance and calling the chief exec to account at times, because chief exec shouldn't just be allowed to get on with it. A good board, I've talked about agendas. A good board is not always measuring outputs, that they're measuring inputs. What are we discussing? What are we doing? How are we helping? Because if you get the agenda right, you tend to get the output right. Should not be a tick box exercise. And don't be the boss. It's so tempting for the chief executive, the chair, to be the boss. You are not the boss. You are, the whole board is the boss of the company. And you're there to represent those shareholders. And I said already, if you've got a strong chair with strong views, you're not facilitating discussions, you have a temptation to dominate. So sometimes chief execs find it very difficult to move into the board space as an independent because they're so used to doing, and it takes a long time to hone your style and hone your relationship with the rest of the organization. And be a representative of the shareholders, the stakeholders. That's what you're there to do. And as I said, in the VC, the venture capital world, it can be harder in terms of that relationship, particularly if you're listed at the same time. So be very careful and be very aware. But it's a great and exciting thing to do, because being on a board is about you and how you interact and your behavior, and really having a good insight in terms of the role of the board, the regulators, the codes of best practice. So for example, you've got the Waits Code for large private companies that interprets the law and how you must apply it. If you're on a financial board, there's the Financial Conduct Authority, there's the Financial Reporting Council if you're listed, there's the Quoted Companies Alliance that interprets for AIM and smaller companies. There's so much support out there for you. Use the regulator as your friend, but remember, when you join a board, your productivity and your output and your success is likely to be related to the behavior of the board and making sure you have the right team in place to do the right thing for an organization. And I briefly want to come on here before a little bit talk about what we do and how we can help you. Is I mentioned boards that monitor, boards that take charge, boards that lead. This is a very good article coming from the Quoted Companies Alliance that I think had the Henley Business School involved as well. But when you join a board, you're often mentoring and supporting a founder if it's of a startup. And one of the jobs of the board is to keep an organisation on track if it's large with low complexity, or a large board with high complexity, to help everybody understand and get on top of what's going on. And mostly age and wisdom matters in boards, not always the case. Great to see organisation like Gucci having shadow boards and bringing younger voice into the boardroom, equally important. But you're often mentoring the whole team. So when I join a board, I often think about which of the executives might I want to reach out and help. And a good chair is actually choosing people around the table based on the skill that they're bringing to the board, alongside their personality and who they might want to help. So there's a lot of support out there can help you. But this is all very well, but what about you? What's your personal pathway into the boardroom if you're interested? Most people who get onto listed boards, large FTSE 250 boards, have been at the listed level as an executive. There are exceptions to that, but it's usually because you have a lot of board experience, maybe in the charity or the government space, and you bring something unique and different. And it's competitive to sell yourself and get into the boardroom. And one thing I would say is the lens on diversity in the boardroom has made it harder to get into the boardroom, and rightly so, for everyone. When I listen to men telling me it's not fair, they only want somebody who's BAME, disabled, or a female to get onto their board, simply not true. 65% of the listed positions are still going to men, but they're finding it harder to just use their connections, and it's harder for everyone. So if you want to get into a boardroom, be sure you know your skills, who you are, and really understand the role of the board. I mentioned that I never think you're too young to be on the board, and I'm happy for Yasmin to send this out. 7 reasons why being on a board is good for you, your company, and society. And I think if you choose the right board, it's like taking a mini MBA. You're floating at the top. It gives you a fantastic point of difference on your CV. And sometimes it's very stressful in your career. And I've found being on boards, I've sat on investment trust boards, I've sat on charity boards. I found no matter how busy I am, I love the headspace of doing something different. So when I was on a medical research eye charity board, Fight the Sight, it's fascinating to sit on a board with eye surgeons, research experts, and bring your different point of perspective. And you don't know what you know until you get out of the organisation that you're currently working with, because you know so much more than you realise you know. And let's be clear, British cycling, the last thing British cycling needs is a load of cyclists. The last thing, because it's event management, it needs finance, it needs all of those other things. And the last thing any board needs is a load of accountants. It's a skills audit of different people. So get out there and have a look. And if you're interested, we have a website, Women on Boards. Please don't let this put any men off, because we support men as well. And that's largely through our corporate members. But register for free and just hang around. We've got vacancies, we've got all sorts of things for you to look at. But for me, it's getting started. Who are you? Where are you? And where do you want to go? Then it's finding the vacancies. Most board positions are not transparently advertised. I mean, we've advertised 20,000 board vacancies and we've got about 200 to 300 on our website now. Don't get excited, because most board positions are still not advertised. So who are you? What's your board value add? Who do you know? Are you having those conversations, and are you engaging? Because that's what we specialise in, how to do that, and we give you a lot of support. And then it's getting serious. Director connections. Headhunter connections. Very hard to get involved in headhunters. There's lots of support out there for you. I mentioned this workshop if you're interested to really unpick you. You know, don't be naive going into this space. Don't find your favourite board position and then apply, get an interview, but not be ready for that high quality interview. And if you do want to do this, you must have a board CV. It's completely different than an executive CV. And as an organisation, we can help you with that. And my top tip today is to take your executive CV, shred it. Don't look at it, you will copy it. We've got an e-course in the cloud and lots of support there for you, because it's crucial you get that right. People will judge you within minutes of you walking in the room, you know that, but they've also read your CV. So they've judged you already. And if you haven't got the language right or the positioning of yourself right, you will struggle to get in the boardroom. And we want more women, particularly in the VC world and private equity world, to get into the boardroom, because it's very male dominated and it will enhance your career. It's just an example of our vacancy board, hundreds of vacancies. Then you can see Eco Hydro is quite interesting, actually. That's a startup, early stage company, not totally startup. They advertised on our vacancy board recently, and it's a hand sanitizer company. So COVID was quite timely for them, and they suddenly realized they were growing really fast and they needed to upskill the board knowledge of what was going on there. So that's an interesting company. And they took 3 of our members. Clifton Melvin is the chair, who put the advert on our vacancy board. Interesting, 2 women and 1 man. And in fact, I was in touch with him yesterday, so thrilled to support him onto that board as well. Loads of success stories. We have about 6 a week. This is just a range of some of the success stories. There's so much out there. And again, a deep dive and also an understanding into the public appointments world is quite interesting if you're interested in getting into the boardroom. We also do loads of events. I mentioned Headhunter. I mean, you shouldn't be on a board if you can't read a P&L and balance sheet, for example. But reading a P&L and balance sheet is not difficult. I think most of you in your space can do that. We do an evening with PwC, and what we do for them is we read the Burberry accounts for a laugh. Like, how difficult can it be? Not very, actually. because you just need a bit of an insight and discussion as to why the cash flow is halving, inventories are doubling, but the chief exec saying everything's marvellous. It's those types of daft, I don't like this word, daft lassie question, my chair often says that, but actually can make a difference at times, so being confident. That's just membership. It costs quite a lot to run our vacancy platform, and all the support after that is free. So that's just a little bit. Now, before I open up to Q&A, start typing in your questions. I might even just pick on a few participants to chat to us, because I always think that's nice. But I think we need to demystify the boardroom. A lot of people worry about your financial responsibilities. I mean, you are accountable. And in the workshop, we talk about insolvency, the risk of that, being aware of that. We also talk about the need for insurance. But most board directors don't get into difficulty. I mean, RBS is an interesting one. If you think about the RBS board and the financial crisis, none of them went to jail. Very few of them, if anyone, was struck off. Lots of court cases, because it's very difficult to prove that they knew what they were doing was totally wrong. I mean, there's an issue with culture. But Alison Rose is turning this organisation around, and this is what she says about the boardroom. So I'm just going to play this video. Yasmin, can you put your face up so I can see you, and then you can wave to me if you can hear this video, okay?
I was a lifeguard when I was 15 when I came back to the UK, and I joined the board of the Lifeguard Trust that was down on the south coast of England, so that was the first one. When I went to university, I think I was on the debating society, I chaired the hockey club board, I worked for the local hospice and set up a charity fundraising for that. And then when I came out of university, I was a cox rowing on the river, competing competitively, and then I joined the board of the rowing club and got involved with that. And then I've joined different campaigns raising money for cancer research. I've joined a couple of school boards to help out at different points. So I've done a few things like that. But I think it's really simple. Join the local rugby club, the local cricket club, the school, the treasury committee, anything like that. Because I think what's really important is demystifying the whole experience. We set up a program called Empty Chairs on all of our executive committees, where we had an empty chair and we invited young female talent to join the board. Peter has done this here at Coots to amazing effect. And it's demystifying what goes on in the boardroom, because I know when I started, I used to think there were all these terribly clever, smart people doing these amazing, magical things. Really not. It's everything that you do day to day, and it's not that different. So the more experience you get like that, the realize you can do everything.
Now, I don't know about you, but I absolutely love that video. A lot of people tell me I'm too busy to be in the boardroom. Most people who get to the top of the Fortune 500 companies around the world have been in the boardroom before the age of 28. They're already different. University boards, club boards. Think of those empty chairs in your company. How many, particularly if you're in the venture capital industry and you're investing in businesses, is there an opportunity for you to observe board meetings? There's a degree of legal issue there on shadow boards, but you can come and ask us for help. Really important to get your boards right. It's not difficult. Don't let, in fact, we're working with, I won't name them, but very large global asset management companies to encourage their minorities to step onto subsidiary boards. Many of them are saying they're not interested in going on XYZ Malta board or whatever. And yet others with less understanding are stepping up to it. So we're supporting those individuals getting involved. So do you have any questions? I'm just going to go to the participant screen now. Yasmin, do you want to bring in any questions that are coming in, or ask me some questions yourself? I'm just going to share a presentation there. So
we've got one from Letitia, saying that you mentioned you're never too young to be on a board. So how do you actually get there when you have no experience to actually gain the top-down view that you need?
Okay, so if you think about a sports board at university, for example, somebody has to take the money in. So it might be the local, the ski society at the club. There's membership fees. They set up a committee. They have a social committee. They have to collect that money. They have to report to the student union. They have to have a president. Somebody's accountable for that little group. That is a board. Now, you know, my son was actually on a ski board at his university, and he almost says, and it's not quite true because he did a chemical engineering degree, you can learn more from that, because he learned about the dynamics of the boardroom, the relationships in the boardroom, who was doing things, who wasn't doing things. Now, they're almost like running a little business, but there's lots of boards out there. There's your school governing board. There might be a committee that you can join. There are so many things out there. So, you know, if I was doing a workshop now, I would show you the public sector, the university boards, committees within, the housing association boards, the hospice boards. Just get engaged and get involved. There's so much out there. And theatres, for example, quite a few of the theatres in London, this is prior to COVID, I have to say, but they were looking at how do they get younger people involved in the theatres more so. And so they set up a committee to discuss that. That's proxy board experience. It's not the full board experience, but there's so much out there. So open your eyes and engage with people, and you will see every building you look at, every institution, every organisation has a board out there. And think of those committees and understand above you, we work with JP Morgan, 33 subsidiary boards in the UK alone. How do they work? Who are the committees? Who's on them? And what's your route to them? There's lots of things out there. So you would be surprised when you start looking what you can get involved in. Yasmin.
Thank you. So we've got another question from Annalise here. Do you have any tips for having more confidence to speak up on boards when you are a young female?
Well, that's interesting. When we do our workshops with corporates, we run a workshop called Managing Your Career, Owning Your Career. And we also do a workshop called OnTruck for Success, which is a little bit about career management, but also thinking about the boardroom for the first time. And when we talk in the OnTruck for Success, which is less about, it has less time in it, we talk about influence. Who are the influences in your organisation, and how do you influence? And I don't believe I can tell you how to do it, because we're all unique and we're all individual. So we all have different backgrounds. And the next thing we talk about is championing your achievements. Does anybody in your department understand who you are and how you can contribute? And could they explain what you do outside your division? Because those that get on, other people can do that. So thinking about how you articulate who you are is important, and meeting management is important. So we do know that minorities get interrupted in meetings. They get ignored in meetings. And if you are a minority, it's harder to bring your voice unless you're uber confident. So I don't lack confidence. I did at school. I'm dyslexic, and I'm supported by a father who, interestingly, was on multiple boards, who took me to the boardroom from the age of 6 because he didn't have childcare for me. My mother was working. So he taught me that I was entitled to sit at the table. So one of the things that you need to do is think about what works for you in meetings. What we really need is better collaborative leaders who make sure that they stay silent and bring people in and find differences views. But if you're in a situation where that's not the case, you need to work out a strategy. I can give you tips. I can't do a whole workshop on this now. We can give you tips about how to do it, but it's working out what works in your organization, because every organization, the division, the departments, and everything is different. But if you're in an organization, you're not going to get up if you're not effective in meetings. And so I would invest in yourself. If you don't get investment within your company, about understanding your impact, listening to videos of yourself and knowing when to speak and how to get attention. If you're getting interrupted, lots of tips. Do not look at the interrupter. Look away from the interrupter and say, interesting point, David, but move your arm away from them. Because it's a bit like giving child attention. But there's lots of strategies there, but meetings are important. You won't get up, and you certainly won't be effective in the boardroom if you don't work it out. So spending time on that is important. It's a great question. Yes, ma'am.
Really, really useful advice. Thank you. So we've got one from Evgenia. You mentioned conformance and performance. So how can you measure performance of the board member to see if they're effective?
Well, every organisation it ought to have a budget, a forecast. That might be a 1-year budget, but almost maybe a 5-year forecast of where we're going. I mean, things are always difficult. You've got to have something to say, have we had a good year or haven't we? So setting targets and KPIs is really, really important. And good organisations have KPIs for talent. who are we recruiting, how are we hiring them. So there's lots of performance data, and a good board is saying what is relevant for us to measure you and what isn't. And it is hard to do. It's very, very hard to do, but important you look at something, but don't spend your time constantly looking at these metrics. I mean, I talked about measuring inputs, not outputs. If you're constantly just looking at a few data, but it is important to really think about what's effective to look at and what isn't effective to look at. So for example, my board looks at the number of vacancies we advertise. They look at how many of our members are applying for those vacancies, because do we have rubbish vacancies that nobody's interested in? What's our success rate? How many of our successes are via getting external positions, i.e. that we didn't advertise, and how many from our vacancy board? So they've got a whole series of things, as well as our top line numbers. And then of course, Remco can get very, very difficult, particularly if they're listed so, because you're often looking at somebody's performance related to a share price. And it may be just the sector share prices going up as opposed to anything, the organisation. So it is complex, really, really complex. But the earlier you get into the boardroom, the more understanding you will have of it. And I did a big Remco event 2 days ago with somebody on a FTSE 100 board talking about, and once you get in the board space and you start thinking about, there's so much support out there for you. But yes, KPIs and getting them right, it is important, not easy.
Great stuff. And probably the last question we have for now, do you have any tips for board interviews or creating a board CV?
Well, tips for creating a board CV. Everything you write on a CV has to be related to your board value add. So I always ask the so what question. What did you do? What was the outcome? And what was the business benefit to the bottom line? If you can't explain that to me, please don't put it on your CV. And make sure that is board relevant. I don't want to know what you do in your day job. I'm not appointing you for a day job. And if I look at your board CV, I want to know, it should be thrown out on a piece of paper. And we do sample CVs on our website. We also have a CV course. I want to know whether your brand and marketing, are you more strategy, performance-based, or are you more conformance-based? Are you a risk expert? If you're an accountant and you don't write that in your first line, you lost on me. I want to know if you've chaired something. Do you even understand the torturous environment of the boardroom and collective decisions? And the more exposures you've had to that, either externally or internally by a proxy board experience, is really, really important. So there's lots of things that need to be on a CV, which is why we have a ECV course. So for any of our members, it costs £195 for access to our vacancy platform, all that one-on-one support at the interview phase, but we also give you free access to the CV. It is complex. Don't think you can write your CV on a Sunday afternoon just because I've given you a couple of tips. Are you having a laugh? It's a deep dive into your career history, and it may be something that you did 25 years ago, like you were a programmer and you really do understand digital, even though digital is not what you currently do. That is the most relevant thing. So getting somebody else to read your CV with experience and taking time to write it means that you've got more chance of getting an effective board position. So it's complex and difficult, and it's worth spending time. And then once you've got your CV, it's not about you proving yourself at the interview. When you're interviewing for a non-exec, it's a two-way interview. I talked about the chair's role. I wouldn't want to join a board unless I like the chair and the chief executive, because that dynamic of that relationship and getting that agenda right, and otherwise I'm in a potential toxic environment. So a good interview is where you're interviewing them as much as they're interviewing you, and you must demonstrate that you understand really the role of the board. And that's why we do this getting started workshop. You can go on a governance course as you like, you can get a certificate, you can be marvellous at that, but at the end of the day, actually you in practice and how you sell yourself onto the board is most relevant, because governance is not difficult. It's all written in a book, and there's loads of regulators and they give you loads of support, and it's not difficult. I know there's the listing rules and all that sort of stuff, but even the takeover code is not difficult. You can read it. But interpreting it and proving that you will add value in the boardroom is crucial. Yasmin.
Hi, Fiona. This is Kelsey. I was actually hoping to ask you a quick question. Good to see you.
And you.
I was hoping you might expand a little bit on the concept of shadow boards that you touched on very briefly. It's not something I've heard a lot about. And I'm curious how it works and if it's something that we might encourage either at our VC funds or, you know, at startups as they grow bigger. So if you could explain that a little bit more, how it works, that'd be great.
Yeah, we'll do. It's a bit like, you may have heard, Kelsey, of reverse mentoring, where you take a young individual who's just joined your company and you put them in touch with one of your managing partners, or, you know, the chief exec. And it's amazing. Interesting enough, whilst it may be a great opportunity for the youngster, usually the more experienced person learns a different perspective of what it's like working in their company. So if you take that concept from an individual cross-mentoring from a board perspective, what would happen if you gave the board, not everything, but you gave a group of people in your company, and I think the Gucci one, they have people from outside, they don't just have their own employees on it, and say, come up with a new strategy, just brainstorm. We're going to do that at this level. What's your thought? And if you get one board director that's in that board meeting, and then can be extraordinary experience what they come up with, because large companies tend to be very governance based. I mean, you know, be careful what you wish for if you go on a listed board. It tends to be more governance based. Whereas if you, that's why they have these strategy shadow boards, to really challenge the board and the strategy. And if you think about the Gucci's brand and how Gucci's changed, you know, in my lifetime, you know, you can barely, it's just wacky and it's amazing. And how much has that come from that young voice coming in? Because companies can get stale. Marks and Spencer's might be a very different company if they'd chosen to do that many, many years ago. I mean, who's to know? But it's something well worth thinking about. But if you set one up, you have to be a confident chief executive. You have to be a confident board. You have to be a board that likes challenge and wants to stargaze.
Thank you.
All companies want to do that. You're welcome, Kelsey, and lovely to see you.
How informative and what great answers. Thank you again for your time and the presentation, Fiona. And for everyone looking to engage in further board training, I will send out information on women on boards after today's session.
Yeah, and I say men, because we work with so many companies, we do a lot of workshops with men as well, because I'm a believer, it's not about women in the boardroom, it's about collaborative leadership. And why would we only help women? You know, we're not a club, that's the whole point. So if any of your boards are looking to widen the net, please do advertise those vacancies, and don't be scared of people you don't know, because if you're scared of people you don't know, you're telling us something about your abilities as a leader, and it's not positive. Thank you very much.
Thanks. Now, I would like to introduce three particularly impressive and experienced VCs who have developed reputations as being hands-on board members at their startups. We have Carolina Brochado, partner at EQT, Martin Gibson, partner at Accel, and Kelsey Lynn Skinner, partner at IP Group. Hi, everyone. It's an honor to have you all.
Hi, Yasmina. Hi, everybody.
Thank you.
Now, to kick things off, everyone who's attending should have read your bios when signing up, but could you quickly introduce yourself? Carolina?
Yeah, of course. Hi, everyone. Super excited to be here. Thank you, Yasmina, for putting this on. It's amazing that you can pull these things together as you're sort of, you know, outside of your day job. I am Carolina. I am a partner at EQT, where we invest across stages. We have an early stage venture fund. We're putting together a growth strategy, and we also have a buyout business. Prior to EQT, I was at SoftBank Vision Fund based in London for around a year and a half, investing in growth companies globally. Prior to that, I was at Atomico, which is an early stage Series A and Series B fund. I've also been at a very early stage startup, from pre-launch to launch to failure. I've worked in large cap buyout in the US, and then I started off my career at Merrill Lynch. So really excited to be here and share this very important topic today.
Fantastic. Thanks, Carolina. And Martin, could you introduce yourself?
Yep. Hi, I'm Martin Gibson. I'm with Accel in London. I've been here for just over 10 years. And my background, originally I was an engineer, worked in a startup. I got lucky the first time that one IPO'd on NASDAQ back in 1995, and then spent the next 6 or 7 years trying to find another one. Joined Atlas Venture as a VC in 2000, just after the peak of the initial dot-com bubble. As an associate, worked my way up to partner there. Then I joined Accel in 2009. And I'm currently responsible for a portfolio of, I think, 11 companies across Israel, Europe, North and South, and also in the US. And for this discussion, I guess the most relevant thing is I've been a board member on about 25 different companies and observer on probably another 10 or so.
That is a lot. Can't wait to hear all about that. And Kelsey.
Yeah, great. Well, thank you for involving me, Yasmina. It's a pleasure to be here. I'm Kelsey Lynn Skinner, and I'm a partner at IP Group. You might guess from my accent, I moved from California, and I was a partner at Fire Lake Capital in California. When I was in California, I was on 6 boards as a director or an observer quite early in my career. And so I identify with some of the questions, and I'm happy to share some of my experiences about feeling young and naive, uneducated, not nearly having the operational experience of the CEOs and management team where I was on a board. And that was more than a decade ago. I moved to the UK in 2012 and have been working at first Touchstone Innovations, which was then acquired by IP Group. And over that time, I've been a director on about another 6 boards and an advisor on a few more. And we focus very early stage, kind of will actually help set up the companies in some situations, lead seed rounds all the way through, Series B, Series C, and try to do that end-to-end investing. So I've had a lot of experience, particularly around helping lead funding strategy for our early stage companies.
Great stuff. So to kick things off, what do most startups need from a VC board member, and how can VC investors best add value to boards? Carolina, would you like to start?
Yeah, of course. And I thought there were some great nuggets of wisdom in the presentation, which were very true. I think, company life cycles are in chapters, and at different points, different boards offer different capabilities. I think for startups at the very early stage, I'll say a couple things, and there's many things, and then people can complement it. I think one is, seeing the forest from the trees. So I think the best boards are really strategic. It's not about, looking at the P&L and saying, why did this go up or down by 20%? But really, as a young company, there's about 800 things that you're working on, but there's a lot less that matter. And I think having those strategic conversations at the board level is really important for those early companies. And then I think it's also flexing a firm's network to help on recruiting and to help on business development or whatever it may be, complementing some of the capabilities and resources that young company might not have.
Good answer. Martin, do you have anything to add to that?
Yeah, I think, and Carolina's just hit on some of the big issues there. There's this ability to step back and spend time on the big things and not all the small things. Where it's very easy to consume a lot of time on the small things. And yes, the team should worry about those, but it's not necessarily a good use of board time. I think one other thing I would add is also the power of focus. And many early startups believe they can do 300 things at the same time because they're amazingly talented people. And actually, the reality is that you succeed by doing one thing really, really, really well and focusing down on exactly what that is and rigorous prioritization. And constantly revisiting and emphasizing those priorities during the board time makes a huge difference. I think also, and Carolina talked about flexing the firm's network, and she's absolutely right on that. But it's not just about introductions, it's also about raising the bar on hiring, helping a company attract the very best people. And then I spend a lot of time working with my CEOs, helping to close the very best people. Adding sort of the firm's kind of halo effects to the company, so people who are excited about it, but perhaps not so willing to take the risk of joining a small company. We can sort of wrap our arms around them and say, look, this makes you part of the family. It's not just about the company; it's about the contribution you make to the firm and the network as a whole, and bringing people into that fold. That can make a big difference in closing candidates you wouldn't otherwise be able to get.
Good stuff. And Kelsey, what do you think startups most need from board members?
Absolutely. So those are great answers, and I agree with them. I'll add 2 things. First and foremost, one of the things I like to look at on my boards is balance. And that balance can come in a lot of different ways. So is there a good mix of external perspectives and internal management perspectives? Is there a good mix of early stage and later stage experience, maybe where we're coming from and where we want to get to? Probably most importantly in a lot of these situations, is there a good power dynamic balance, right? Is there one person who's dominating the board? And if so, you know, how can that be addressed? Is there a good balance of optimism and conservatism? And so so there's two ways that I look to address that balance. One is, what can I bring, right? So if I'm noticing that the board is naturally extremely optimistic, I try to temper that. If I notice that the board is actually, you know, and unfortunately this often happens as companies develop and maybe get more and more investors on board, actually can become quite a very critical environment on the board, and the CEO sometimes will feel quite exposed, like they're the only person still rooting for it. And so then I look, you know, how can I bring support to that, or do we need? And so the second way that I look at bringing that balance is, what restructuring might we want to consider, either immediately or over time, you know, maybe at the next funding round, if we're looking to bring in an independent person or a new chair, what characteristics do we want to make sure that that person has? So balance is the key thing that I look for on my boards. And I have some kind of crazy stories about when that hasn't worked, particularly back in California, where there's some very big personalities. And so it is something that, you know, I've learned firsthand the importance of. The second thing, and this touches on points that Carolina and Martin raised, but I'll call funding strategy. One thing that I have learned, you know, over the last 12 years is that really, really good startup CEOs don't necessarily know how to fundraise. You know, a lot of times they're coming out of other relevant industry jobs, corporate jobs. They know the industry inside and out. They know exactly what the company needs to do. They're fantastic managers and leaders. But they've never raised money in the venture environment. And as you all know, that's hard. That's a learning curve. And so I view my role as an investor director to try to help them navigate that. And sometimes that is, you know, coaching them through that and helping them think about what milestones specifically will enable what funding opportunities from what specific VCs. And most of the businesses that I work with are cash negative. And so it becomes all the more critical, right? You know, how far in advance do we need to be monitoring cash flow? What are the ups and the downs that could affect that? And then, of course, the other things that were addressed in terms of tapping networks, I think is important. But even I think taking the step before that of making sure there's a good funding strategy in place is crucial for the board.
Great. And beyond the great point of bringing balance to boards, what do you think are, let's say, 3 of the most important qualities to be an effective board member? Martin?
Let's try unmuting. That's always better. So this is really difficult because it's so context dependent. So I think rather than say these are the 3 most important things, the question I think is then what can I bring? And I think from my own perspective, I take curiosity is really important. That means really understanding what is the company doing, what's the specific situation, what are the issues that we need to address, rather than just flicking through the board pack and then rocking up for the board meeting half informed. That's not good enough. Sort of a sub part of that is humility. It's not about me. It's not about my firm. It's about the company as a whole. And I take the view that if we build great businesses, then we'll deliver great returns. And it's company success first. Secondly, I think it's what I call patient impatience, patiently driving towards the future and the next thing, and almost being relentless in getting done the things that need to get done, and being tenacious rather than showing up, making a lot of noise and disappearing to the next board meeting. There's a lot of work that goes on in the background to ensure that things are driving forward in the right direction. And then I think the third one is sort of focused ambition, knowing what excellent looks like and constantly raising the bar, stretching teams to think deeper, to try for that next candidate, to within the bounds of feasibility, stretch the budget a little bit further. And those are the three things that I try and bring.
And how about you, Kelsey?
Well, my first one actually builds on Martin's, which is honing the core message, right? And honing the core focus. It's so easy for startups to want to boil the ocean, and so really helping them figure out what is their differentiator, how do they articulate it, does it make sense, and how do they clearly communicate that, I think is a core part. I think a second part is openness and trust. And that again goes along a little bit with the curiosity part, but also, you know, different people at a board table have different agendas. And the more that everyone can be open about those and share the different objectives they may have or the different perspectives they're looking at, and trust each other that everyone's coming at it from a good place is really critical. And then the third part, we haven't really touched on here, but is bringing a totally different perspective. So if everybody is looking at things from this perspective and you can really think outside the box and perhaps identify risk factors that haven't been considered, or, you know, even more excitingly, opportunities that haven't been considered, that may be appropriate in the board meeting if they're significant, but more often in my experience, it's helpful to you know, have your own brainstorm session in your head during the board meeting, and then maybe afterwards just have a one-on-one session with the CEO to consider that. And as a quick example of the potential benefit of that, a few years ago, one of my companies was struggling to figure out how to attract some government funding because the way they were structured didn't enable it. And I remember one morning I was blow drying my hair, and all of a sudden it struck me a really creative way that we could restructure the company that would allow us to access this government funding. And I called the CEO and the chair, and they're like, I don't know if that's, you know, that's pretty creative, and we're not sure if that's allowed. And so I happened to know somebody who worked in that government organization. So I called him, and his response was, wow, in all the brainstorming we've done around this particular structure, nobody had thought about approaching it that way, but it doesn't break any of the rules. And so I guess it's allowed. So long story short, we ended up, everyone on the board got comfortable with it. And I share it because it actually ended up unlocking funding that saved the company. The company was going to go insolvent otherwise. And again, there was comments about like, wow, that was just, it was so outside the box. It's one of the very few examples I have where I feel it actually contributed to one of my companies. But I think that is something that we can all do, is kind of think about, you know, how are we automatically looking at it? And then particularly for women on the boards, or people from different countries, or people from different backgrounds, what different perspective might you have that looks, you know, that you can help think outside the box?
And how about you, Carolina?
Look, I think there's a lot that's been very correctly said. So maybe I will just add one final thing, which is devoting time. And I think when you take a position as an independent, it's one thing. When you take a position as part of, you know, your firm, and particularly as people, you know, are busy and have loads of boards, you often see that people see like, okay, I'm going to show up to this board. This is going to be the 4 hours. I think about this, and then I'll go do something else. But it's really taking that on holistically, right? And I think Martin mentioned this, is there's a lot of work that should and can be done outside the board. And that then I think takes away a lot of the pressure from the board meeting, because a lot of those discussions have been had, they've been had in the right settings, in the right ways. And you can, you know, devote the amount of time, appropriate time for that role, not only in the board context, but outside as well.
Great. And overall, how do you feel that these roles change as time goes on? So how do board member responsibilities and challenges change with the growth of the company? Kelsey, would you like to start?
Sure. I'll keep it short. They absolutely change over the course of the company, but I also find that they can be really different company to company. You know, companies can be at the same stage, but just based on the personalities and you know, the specifics around that company, they can be really different. One thing that I have learned to use over the course of my career that may be helpful is the definition of success for a board member often being time-based. So a concept, for example, of a launch chair or a launch CEO, and particularly when we're working really early stage companies, we know that, you know, a CEO needs to be extremely opportunistic and go-getter, but that's not necessarily the same characteristics that we may think are most appropriate for the next stage of the company's evolution. And so by actually having that conversation with the CEO up front, and maybe even using the title launch CEO for, you know, a 2-year period, and success to you is getting it to this point, hitting these milestones, and helping identify your successor, that actually frames it in a much more comfortable position than 2 years later surprising them with, okay, now we want to replace you. And that kind of goes back to the openness and trust thing that we try to use frequently.
Great. And Carolina, how do you feel that board member responsibilities change with the growth of the company?
Yeah, I think a lot of it stays the same, but if you think about the board as a strategic sort of group of people, then early on, you know, the company has sort of existential risk, right? And everything you do needs to be mapped out to address product market fit, strengthening the team, converting the top talent, to Martin's point, that may not believe in the company. Then you have the growth phase. And then it becomes about the execution risk on what should have product market fit and scaling in some sort of vector. And then you sort of become a little bit of an incumbent in a way within a disruptive, you know, set of people or companies. And then it becomes, you know, how to disrupt from the top. And so I think strategically, you know, the priorities change over time. And by the way, I think it's also super healthy for the composition of a board to change over time, right? And it's great actually that as you approach IPO, there's this onus to have more independence, et cetera, because I think different kinds of board members are good for different points in time as well. Similarly to teams and how you're always upgrading that, I think, you know, a board also has different life cycles.
And Martin, how do you as a board member change over time?
Yeah, it's, I keep giving the same answer, but it's so context dependent, right? I think, you know, understanding where you are on the journey and what's necessary for that stage of the journey is really important. And one thing which I tend to do is look at what does a successful board look like in this kind of context, and where are we compared to, in our journey compared to this company? How do we evolve from where we are to where we need to be? And what roles are people fulfilling? Do we have the right kind of makeup that would suit a public company, or do we have the right entrepreneurial talent and leadership? And how do we evolve the leadership as the company evolves? And also thinking about, you know, where in the company's life cycle should we be thinking about liquidity events or exits? Should we be considering those, or are we just driving forward to be a standalone, sustainable company for the future? What's the right thing? Do we have a strong enough market position that allows us to do that? That's something which is, you know, not really relevant in the early stages of a company's life at all, but after several years and the company's achieved a certain scale, absolutely becomes relevant, particularly when, if you're showing any kind of success, you're likely getting inbound interest in the company anyway, you know, either through financing or to acquire, and how you respond to that, or even whether you respond to that.
Great answers. So building on from this, what is an example of the most value add that you have created as a board member to date? Carolina, would you like to kick off?
Of course. This is a very tough one. But I think it's a similar example to, and I guess it really depends how you quantify things, right? But it's a similar example to Kelsey's, in the sense that sometimes you have the opportunity to think a little bit out of the box because you just have a different point of view and a different perspective. And for me, it was in a way where, you know, a company had a particular part of the market, and there was another company that had a different part of the market, and together they'd be stronger. And so it'd be like unlocking a merger, unlocking capital going in at the same time of the merger. Obviously, a lot of moving pieces, and making CEOs sort of come together, think about the dynamics in terms of shares, capitalizing at the same time, and then, you know, building a better business. And of course, this is the bread and butter of investors, right? Is sort of deal making and funding. And so that is something that, we just instinctively have a little bit more experience in terms of, when to collapse and potentially, change an outcome.
And Marcia?
Yeah, I'm going to break this down into 3 different perspectives, 3 lenses, if you like. I think there are some sort of very point interventions you can make, and the most obvious one is where you have to change leadership, and so initiating that change, persuading the incumbent that this is good for the company, so you can do it in a collaborative way. Running the search, hiring the individual, onboarding them, helping them succeed in the new context. That's one very sort of specific point in time. I think that's a place where you can add a huge amount of value, but also destroy a huge amount of value if you get it wrong, and it's hard. The second one, which is perhaps a bit more, slightly broader perspective, is several companies I've worked with, when I've arrived on the board, the board meetings are very much kind of weather report. This is what happened yesterday. This is what we think the temperature is going to be like tomorrow. Maybe it's going to rain. And taking that stuff out of the board meeting itself and putting in processes which are communicating what's happened in the past prior to the board meeting, materials distributed sufficiently in advance that you can have clarifications or Q&As or a separate briefing call. And by doing that, everybody's informed, everybody's up to date, and it allows the discussion in the board meeting to shift towards the more strategic, forward-looking, big decisions. And so you're using that very valuable time, which is short, it's always too short, where the board is actually together and able to focus together on the specific companies, and you can hear the debate and all the different perspectives. So enabling that is, I think, one of the changes I've made in one particular company. And then I think the third perspective, which is even broader in its perspective, is that the recognition that being the CEO of a small startup company is a very lonely job. You don't know who you can trust. You've got no people around you. You may, if you're lucky, you've got some co-founders, but often not. And so being a trusted counsel to the CEO, always being available, always being able to listen, understand, share balanced opinions, that in itself doesn't feel like you're actually doing much, but I think for founders and CEOs, it's hugely valuable.
Love the breakdown there, and I'm sure we'll dig into the Steve Jobs situation you alluded to before. Kelsey, how about you? Any other eureka moments whilst blow drying your hair?
I'll actually answer the opposite, which is kind of some of the key ways I've not contributed to my boards. But actually, I think it relates to the conversation that was, and one of the questions that was asked earlier, which is when you're early in your career and maybe you don't have a lot of operational experience and you're a year or 2 into VC and you're either an observer or a director on a board, how do you contribute then? And I look back when I was early in my career, and I put immense pressure on myself to contribute in these board meetings. And I look back and I wish I could just whisper to myself, you don't need to talk, it's okay. And I think that is, it goes back to one of Fiona's excellent points that a good chair, who's often, the biggest contributor, is actually talking less than 10%. So often in these board meetings, it's about, less is more. And so one of my great VC mentors said to me, Kelsey, if you get to make 1 point in a board meeting or 1 point in an investment committee, what is the one thing that you think is most critical here? And I now bring that with me to many of my board meetings because it keeps me from going too much into like random details, but it also helps me really hone in advance. What do I think is most critical here that I want to direct the board to? And then I think also, the other piece of advice I'd give to my younger self is watch and observe and learn. Different boards are just so different from each other that you can learn so much by watching those dynamics, and then most importantly, interacting outside the board meeting. And that has been touched on several times, but I don't think it can be overemphasized because in my experience, the vast majority of contributions from the board members do not happen in the board meeting themselves. It's about kind of the pre-work or the post-work or the brainstorming or following up with something that didn't feel quite right and you just want to get under the skin about it a little bit more. So I hope that helps a little bit.
That's a greatly relevant answer to the audience, actually, and it also overlaps with the very next question. So Martin, how about you? What are the biggest learnings you've made in your experience? How have you changed as a board member from your board seat till now?
Yeah, I think if I go back to the very earliest days when I was sort of freshly minted associate, fresh out of business school, I think I was focused on sort of the things I understood rather than the things that mattered. So the things I understood were some of the details of some of the markets that some of the companies were operating in because of my background. And I understood how to dig into the details of the financial plan and things like that. But none of that was necessarily the important stuff. And over time, I think as you become more familiar with the companies and the kinds of challenges that companies face, and there is a lot of sort of repeated pattern recognition here, if you like, you sort of learn to step further and further and further back. And so what Kelsey's just said, what are the things that matter? Not necessarily the point, the thing that I want to get across, but the things that need to change. And I'll often go into the meeting, just like Kelsey does, with a list of these are the things that really matter for this meeting. But I actually don't care if I make the point. So a point about not saying something. What I care about is that they get done. And if there's somebody else in the room who is picking up that point in the agenda and driving it forward, I'm perfectly happy to just sit back and say nothing and support them if necessary so the point gets made and change happens. But it doesn't mean that I have to have airtime. I think sometimes the most successful meetings are I come out, I've said next to nothing, the three things that I cared about have just happened, and I've saved my political capital for when I need it in the future. Brilliant, great outcome.
Great, so note to everyone, write down the three things. How about you, Carolina?
I think everything that was said really resonates deeply. And to go back to sort of, I was very lucky early in my career on boards to have great role models who were on boards, both investors and also operators who had sat in the entrepreneur's seat. And I think for anyone starting off, if you can get that exposure, it's amazing because you really, learn how to go back to the initial presentation, when to stay silent, when to fight the hard battles. And I find that what I've learned over time has been, to Martin's point, to stay silent if I don't have to have those discussions, because board meetings can get quite tense around certain topics, and sometimes people are more concerned about them making the point, to Martin's point, than the point being made at all. And what I've learned, and also being a woman and looking younger than some more gray-haired people in the room, is that I actually don't necessarily need to make those points in the board meeting either. And I actually try to have, especially if I know they're going to be controversial conversations ahead with the founder, with the CEO, and then they know where I stand going into the board meeting, which I also find that changes the dynamic quite a bit. And of course, if you have a discussion, you can always change your mind, right? But I think that's been one of the lessons I've learned, that is not the be all end all place for decisions to be formed.
Yeah,
Yasmin, is it okay if I build on that? Oh yeah, Martin too, go for it.
No, you were first.
Well, just to build on that, because I so wholeheartedly believe in the value of mentors, and absolutely the value of mentors in the board meeting. If there's somebody else there, whether it's a great chair or another investor that you can learn a lot from. But actually, I found that I can refine my board experiences by also talking to people who aren't on the board and just bouncing. So whether it's people in my VC firm or other co-investors that actually have nothing to do with this, but are just a lot more experienced, and saying, this is what I'm experiencing in my board. Is this normal, right? Or is something wrong here? And a lot of times they'll give me, maybe cliched advice, or like very super 40,000 foot high level advice that actually is spot on. And so if you feel that, you know, you don't have a board opportunity where there are other super knowledgeable people, there are still ways that you can get that insight, I think, even outside the boardroom.
And Martin, did you have something
Sorry,
to add?
Martin.
The thing I was going to say was, I think this was particularly relevant around earlier this year when the coronavirus was really starting to hit, and some of the companies, particularly those with inexperienced CEOs, hadn't really taken on board how serious this could be. Board meetings often get a kind of momentum, and you know, when groupthink takes hold, and it's very easy for an overconfident founder to assume that everything's going to be great and they're just going to power through this period and they're going to hit their plan, or the effect of people not being in the office on their business development is going to be trivial and everything's going to be great. Getting ahead of that game and having those conversations with the founders prior to the board meeting, so you don't end up in this sort of groupthink towards go, and saying, look, this is what's happened in reality. You're going to have to make some hard decisions here, so that when we actually get to the meeting, I kind of know what they're all going to say. That's been a huge learning, particularly around these sort of more controversial topics.
Great, and then actually following on from the topic of controversial conversations or controversial topics, your mention of coronavirus, what have you found to be one of the most common challenging situations you've had to deal with as a board member? Kelsey, would you like to start?
Sure. I think probably overall, you know, I group my challenging situations in kind of one big bucket of things are not going well, and so therefore, what action do we as a board take, or if I'm the lead investor, do I try to take? And that kind of falls into three buckets. One is if I've had situations where something went really wrong, and this I think was not uncommon earlier this year with COVID, but something goes really wrong with revenue, and you think cash out is 6 months away, and suddenly cash out is a month away, right? Or, you know, something dramatically shifts. And then, you know, especially as lead investor, do we come in with, savior funding? So that's kind of one difficult situation. That's a part of how do we handle this. Another one is, related sometimes to that first situation is whether a significant board or team shakeup is necessary. And so I can think of, a different situation where we had to actually replace the chair and the CEO on the same day. That was, you know, a very stressful situation. Yeah, I wouldn't do that again. If I learned an important lesson that day, but you know, due to the dynamics at the time, that seemed like the right answer. And then a third one, particularly with some of our early stage investments, is do we write it off and walk away? And so I can actually think back of one particular quarter, the first quarter of 2017, where I had 3 boards that had all 3 of those situations within a single quarter. And that was an extremely difficult quarter. I survived and learned a ton. And that's also something that I've learned through all of this is, you know, going through these really difficult situations, you learn so much more than a company that is, just humming along. But I would say overall, that's kind of like, when something is clearly going wrong, what do you do, and how do you take action to try to solve it?
Carolina?
So I think to complement that, I think the hardest situation, and again, referring back to the presentation, boards are made of people, companies are made of people, and I think the harder situations, are related to people and people issues within companies. Be that replacing, someone on the C team, founders or co-founders coming apart, or issues with investors. I think those are really, really tough board situations, and they may be because cash run out is far away, or it may be because it has problems, but those become times when board members can be really value added or really value detracting. And you really have to work together and think medium and long term, and help the people in that situation sort of diffuse the emotion, right? It's really hard when it's co-founders, it's really hard when it's C team, and it's really hard when there's a backdrop of the company may not be doing well or maybe running out of cash. And I think there, you know, it can become very emotional. And there's a lot of potentially pressure on you as board member for a fund, but, you know, you have to always remember that that is, you know, the founder's, you know, baby, the full, you know, their full focus, right? And I think that's where, you know, boards really have the opportunity to sort of come together and be helpful and help companies get through it. Or actually it can be really destructive, and it can be, you know, a really big issue for businesses as well.
And Martin.
Yeah, I think I can sort of paint a picture of there's an upside scenario and a downside scenario, which are equally difficult, but in different ways. I think on the downside case, one of the most difficult things is deciding whether, if a company's just not working, whether to soldier on and try and find a solution, or and hope there's a way forward, or actually taking the decision that, yeah, let's go and spend our time doing something else and actively shutting it down. Very difficult when you have, you know, founders, as Carolina just said, where, you know, it is their baby. They're fully committed to this. They've dedicated their life over several years to try and make this thing work. That's a very difficult situation, but sometimes it's still the right thing to do. And then on the opposite end of the spectrum, there's also when businesses appear to be going really, really, really well, whether to engage in an exit process or not. If you're getting, you know, inbound interest, should you or should you not? Or should you just simply say, not right now? You're gambling, rolling the dice again, and going back to the market and raising funding and pushing on for the big win. Now, one of the challenges there is, if you're an early stage fund with a limited size, with limited capital, how much dilution are you going to take in the case of a company that, you know, raises additional rounds of funding? And actually, is the return for your funds going to be better to exit now or to push on for the next phase or two? And in that situation, you can be horribly conflicted. As a board member, you want to push on and drive the company forward, but as an investor, you're trying to look after the interests for your fund, and you've got these two hats to wear, and they're in direct conflict. You're trying to split your brain down the middle and do the right thing, and that is really hard.
Do you actually have any?
Yasmina, is it okay if I build on that real quickly? Because I actually think that's one of the most important things is separating out hats, because it can often it can be like this subversive conflict that thankfully is not an issue 95% of the time, but when it's an issue, it's an issue. And actually, I think that as venture investors, we can often be role models about very consciously and explicitly separating those hats, because actually it turns out that everybody on the board has conflicts, right? You know, people are often founders, shareholders, management, non-execs, you know, salaried, whatever. So people have multiple different hats they're wearing, multiple different perspectives. And it's just really healthy for a board to be able to call those out. And for us as an investor to be able to say, as a board director, I think this is best. As an investor, actually, my investment committee is going to look at it this way. And just being able to explicitly say that, just to Martin's point, I think is something that I underestimated early in my career and now try to very proactively handle.
Yeah, I think also there's, when you get into that situation, there's also the conflict. The founder has a conflict as well about doing the right thing for the company versus doing the right thing for their early investors. And that relationship that you build with the founder from the very beginning can have a massive influence on the outcome.
And actually, one idea to just throw out there that we've used a few times when we've had companies go to the brink of insolvency, and those conflicts can become quite difficult for me as a board director, because maybe I'm wearing my board director hat, maybe I'm also wearing a loan holder hat. If we put in a convertible loan, for example, we will actually sometimes split out the roles where I'm fully the board director, and then, you know, our investment committee chair is fully the loan holder and is making decisions on behalf of the loan holder. And again, that can help with conflicts. So just a potential tool for others that are in that position.
Yeah.
Fantastic tool. Jumping back to before, Kelsey mentioned her team shakeup replacing chairs and CEOs, but Carolina, what are some other ways that you've dealt with a disruptive or non-productive board member?
Yeah, that's a tough one. I think it also depends on sort of the level of disruption. if you have someone who's just unfocused or sort of just brings a little bit of lack of order to the board meeting, I think always a good idea is to add a chairman to a board. I think chairmans, when they're good, they're very good in keeping people to the agenda, in driving consensus, and make sure that conversations are had out of board meetings. Then if you have someone who's a very, very difficult board member that is really taking away value and you have to remove them, I'm going to use Martin's "it depends" answer on who that board member is and whether it's possible to unlock that. But you know, I think, and I think many of the panelists here's firms have the same view, right? That if the founder develops a good relationship with the board member or the firm, that there should be a conversation that is had there, right? If it's a VC member that's being particularly disruptive or unhelpful, to go back to the firm and say, you know, have that open dialogue beyond just the board member. And I know that when I invested early stage at Atomico, whenever we wrote out a term sheet, we talked about who would be the board member, et cetera, there was always a very open conversation of, you know, by the way, if you ever feel you outgrow us, right, and we're not helpful on this board anymore, then please do let us know. So yeah, so it's a little bit of an open-ended answer, but I think chairmans help, and then just making sure that founders have that conversation early on in the life cycle with an investor, to make sure that they are clear on what the exit strategy for that investor on the board may be, because I think that's probably a very revealing conversation.
Great. And do you have anything to add to that, Martin?
Yeah, I'm smiling because I've been through the situation where we had one disruptive board member who was actually the chairman of the company as well. And it was just destroying the debate around the table and taking the company in completely the wrong direction. And word got back to that investors partnership about what was going on. And actually that individual left the firm shortly after. No, I don't think that was my doing. It was the congruence of many different events, many different situations across several different companies. But that was one huge improvement. But I think, you know, often it does depend on why that person's there, and they may be there by right of what's written in the company's documents, and there's very little you can do about that within the room, but there are some things you can do outside of the room. So, you know, one thing I've done on several occasions is kind of become the buffer zone between that individual and the CEO. So I absorb the shocks, I isolate and insulate that influence from the CEO. And you can't do it in the in-person board meeting, but between times, becoming the person who takes on the project, which deals with the issue that those individuals banging on about, and kind of absorbing that so the CEO can focus on the day job. I've done that. And then the second thing is sort of working outside of the board meeting with that individual. It's kind of the same thing, but they may be right in their concerns, but the way they're going about it is wrong. So, you know, bringing a different dynamic around the issue to the situation by getting down into the detail alongside them helps to diffuse a lot of the emotion around it.
And I have just to add, I have seen a situation where every other board member recused themselves from a board meeting if an individual was not replaced, by the way, in a very extreme case.
I haven't seen that one.
Very dramatic.
I haven't either, thankfully. There's two other tools to just add to Martin's very helpful list of tools, I think, that might be worth sharing real quickly. One is that, similarly, I had a company where the chairman was quite controlling, and we didn't want to remove him because of some historical reasons that he was quite important to the company. So what we ended up doing was bringing in an independent who was equally big ego, and they canceled each other out. Yeah, and that could have gone either way, but it actually worked surprisingly well because they balanced each other, and then we were able to once again have balance on the board. So I just wanted to throw that out as a potential tool depending on the circumstance. And then the other tool that I use a lot, we call the triumvirate, which is the triumvirate of the chair, the CEO, and the investor director, the lead investor. Is that triumvirate working, right? Are they communicating? Because ideally you should be having communication in all three of those like triangle legs. And if one of those three people is either weak or not communicating or not trusting, then kind of analyzing it from that tool, I have found very helpful to figure out what needs to change. But that is something I really strive for in my different boards, is to make sure that that kind of core is working well.
Right. And just conscious of time, so we'll jump straight into the advice section. What are some of the biggest mistakes you see first-time board members make in the boardroom? Kelsey?
Lots of mistakes, many of which I've made myself. I would say one is the most common one that I see is trying to prove value when it doesn't need to be proven, right? So it's like an insecurity that manifests itself by asking a bazillion questions that are just kind of going in all different directions, or trying to show how smart you are by like asking really, really, really technical questions that just doesn't necessarily have a place there. And so I think that it does kind of come back to that, have faith in yourself. Know that you're contributing outside of the board meeting. That doesn't necessarily mean you need to be showing off inside the board meeting. But I'd say, and then probably actually underestimating one's influence is the other one that I commonly see. So I think particularly as investors, we have a surprising amount of influence, but that's not by pounding the table at a board meeting. But that might be by analyzing that triumvirate and figuring out that actually, it might be time to rotate the chair, maybe talking to the CEO about how that dynamic's working, talking to another investor about how that dynamic's working, kind of building influence that way, having an open conversation with the chair about what's working well, what's not. And so I think that there's a lot of really creative ways, even early in your career, where you can build that influence.
And here's one for everyone. In your experience, are there subtle differences in how female board directors or observers are perceived differently? So either by other board members or company founders. And would you happen to know of any tips and tricks on how to deal? Martin, your perspective as a male without experiencing would be great to start off with.
So this is I actually find this surprisingly difficult to answer, and I think that's quite concerning actually. So I should be able to spot the differences and make sure it doesn't become an issue. So I have worked on numerous occasions with female board members, and I think my experience is that they've been every bit as valuable around the table. In some cases, they were the chair of the board. In some cases, they were independents. In some cases, they were investors. I think I've been fortunate in that they've been great. And so I haven't seen evidence, but I'm also concerned that I have a particular perspective, which means I might not be as tuned to it. I certainly know that I have 3 daughters, and if I step in the wrong direction, I know about it. And I do. I make mistakes occasionally.
How about you, Caroline? Have you seen anything?
Yeah, absolutely. And you feel it too. And I know it's not just me, because I often check in with my friends who are also on boards. And the most frequent one is interruption. That happens often. People speaking over you, and even people violently disagreeing with you in ways that they wouldn't do with other people. So I think all those things happen, and they're there. In most cases, right, you obviously have a connection with the founder or the CEO, and so that carries through. But I think early in your career, it can be really damaging to your self-confidence, because you view that they're interrupting me because I'm saying something stupid, or something that doesn't add value. And so I think it's really important for, if you're a minority on a board, to be aware that that's happening to you, but then for everyone else on a board to try to make yourself aware of that and help, right? And I've had instances where, now people interrupt me and I will say, please don't interrupt me, I'm making a point, right? But it takes you a while to get there. And so if other people can say, I think so-and-so was saying something, could you please let them finish? Which I've had founders do. I think that's super helpful. But I think in some, don't take it personally. Be confident in what you're saying, and if you're participating, use moments outside of the board. I think that this is also very common for minorities, but always be over prepared. I find that most people tend to be very underprepared for board meetings and tend to be sometimes unfocused. And so those can be some of your superpowers. And also know that you're not alone, and it happens to everyone. It happens to me, and it happens to many other minorities I know who sit on boards.
Thank you. I'm Kelsey.
Yeah, I'll build on that. So I also completely think it is different being either a woman or a minority on a board, particularly minorities that you immediately know. So actually for me, being a foreigner has been an even bigger issue than the gender one, particularly when I first arrived. And, you know, straight out of 15 years in California, I very direct, very forceful, I kind of skipped over niceties and had a few chairmen and bosses pull me aside and said, we really need to work on your style. And that was, you know, very damaging to me at the time. I was called rude, and I was like, never in my life have I been called rude. But it was just, it's a different environment, different styles. Particularly some of my boards were completely British men. And I just needed to learn to adjust my style. So I think that being a woman or a minority is both challenging, and the research shows again and again and again, you know, why it is so challenging. Kind of there's much more narrow band of acceptable behavior, several of the points Carolina mentioned. But I also think it's a huge opportunity. And for me, I actually feel like the benefits outweigh the cons, particularly if I don't get too weighed down in the cons. Like when things happen and people interrupt me, you know, exactly as Carolina said, you just find ways to move on from it. Don't let it get to you. But the benefits, so going back to, you know, earlier themes about being able to think creatively, come at things from a different perspective, maybe have a different network, all of those things are so much stronger with diversity. And it's part of the reason I'm extremely passionate about diversity on my boards. And we're now trying to kind of filter that throughout our portfolio. And unsurprisingly, early stage tech companies are not particularly diverse. And so I've been working very closely with our CEO on a regular basis, talking about diversity, talking about, you know, all the research, this amazing research around even adding one woman to a board increases the average valuation on that company 26%. Right? And that's been shown across thousands of companies around the world. Like, that's a really big deal. And so I actually ran the numbers and explained to our CEO that we were leaving 63 million pounds just from our top assets on the table by only having all men boards in half of our portfolio companies. And the great thing is, in the next company pitch we had in, all male presenting team, all male board, the CEO said, excuse me, why is the board all male? And so it was just, you know, helping raise those issues, raise the awareness around diversity and the different perspectives that can come.
26%. VCs spread the word to all your companies today. So thank you all. Some great stories and learnings in there. Now, just for a few quick Q&A from the audience. We've got a question from Emma. General question here on your opinion regarding the style of challenging in a board conversation that is more effective as a VC board member. Is it better to ask coaching style questions to management, challenging them on their strategy, or is it better to be more upfront if we have doubts in their direction? Anyone who wants to take this?
I'll go. I'm a big fan of open questions. A big fan, because rather than not just because it creates less tension in the room, also because it reveals a lot about the quality of the thought behind a position.
Great.
And I'll caveat that just with, yet make it clear exactly what you're going for. I think it can be uncomfortable sometimes if they feel like you're trying to make some point, but you're asking a question over here. And just for the purpose of openness and trust, I agree that open-ended questions can be hugely valuable, as long as it is also clear what it is that you're concerned about.
And for anyone, how have you seen board observers or fake board observers provide value and work effectively with management and board directors?
I'm not sure what a fake board observer is, but I think observer seats are a great way to sort of observe board meetings. And also it shouldn't, whether you're, you know, the board member or the observer, of course, there's like official roles attached to that, but it doesn't stop you from working with a company outside of the board meetings. It doesn't stop you from being a cohesive part of the board. Of course, you have a board meeting, and then you have all sorts of activities around that. So I think you can be, you know, probably just as effective or even more effective than a board member by being an observer. And I wouldn't feel that that's, you know, you're not part of the board or the company, or, you know, it's a demotion.
And Kelsey, what are some practical ways of contributing to an open and transparent board culture?
Well, so one thing I just wanted to highlight was some of the differences I've seen between California boards and UK-based boards, because it actually touches a lot on that last question, which is, in my experience in California boards, observers were a lot more common, particularly younger. So most of the VC investors would have a general partner as a board director and then an associate as an observer. And that was fantastic for me, because within 6 months of my MBA, I was on 5 different board observer roles, and just learning a ton from that. And I think it's a shame that that's much, much less common in the UK. And and I think it's something that, you know, each of the VC firms that I've worked at, I've tried really hard to institute that. Can we be bringing more observers onto our boards for them to get more exposure and more learning? Obviously, the size of the board is really important and relevant. And that ties to your question a little bit around openness and transparency. If the board starts getting to the size that it's difficult to have a good conversation, then that needs to be addressed, I think. And one way that can be addressed is a little bit, maybe sometimes subcommittees, where you can, you know, get into a deeper topic. But also, you know, going back to kind of the earlier conversation about the stages of a company, we try very hard to, particularly for founders, to set their expectations about how long they'll be on the board, or maybe they can be a board observer for a couple of years, but then there's the opportunity to rotate them off if just the size of the board is becoming ineffective.
Great. Well, thank you so much, Carolina, Martin, and Kelsey. This has been a truly insightful session, and I'm sure all the young VCs in the audience today thoroughly appreciate you taking the time to share your knowledge, and we'll put your advice to good use. Now, for everyone out there, I'll post the links in a follow-up email. Thank you for attending, and have a great day. Bye, everyone.
Thank you, Yasmina.